All right, welcome back to the Brutally Honest Loan Officer podcast. And today we're going to be talking about first-time home buyers. But first, I'm Stephen Brock with the mortgage firm, and then this is Derick.
Eric Brown with the mortgage firm. What's up, buddy?
How you doing?
Doing great. How was your weekend?
It was wonderful. What did we do? We basically stayed around. Well, we went to the bourbon bacon festival in Wellington.
Okay.
So
I'm a
very
little
kid
jealous.
friendly. What about
Was
you?
it very kid friendly or is that sarcasm?
There's bacon.
Okay. Lots of bourbon too.
Lots of bourbon too, but there's bacon and playgrounds.
No, well, we didn't have any bourbon this weekend. We are in birthday season for like my friends that have kids the same age as us, or as my kids. So we had a birthday party on Saturday, birthday party on Sunday. Last weekend we had a birthday party. Next weekend we've got a birthday party. The following weekend we have a birthday party. Guess what we have after that? A birthday party. Dude, like it's yeah. Which I mean, I guess it just goes in phases because like 5, 6, 7 years ago it was wedding season,
Yeah, I mean,
and now it's little kid birthday parties season.
so
So
what was everybody doing 10 months ago? Jeez.
yikes. Um, but yeah, so we had some birthday parties and hung out with some friends, and the kids had a blast, and I don't know, fun weekend. You know, nothing too crazy.
So let's get on our
But
topic. First time home buyers. Some
first
tips for
time
them.
home buyers. Have you ever done a first time home buyer loan?
We were just talking about this before we got on, and I would say you ran your numbers real quick, but I could probably off the top of my head say at least 50 to 60. And that is being very conservative of the numbers. 50 to 60% of the loans I've ever done have been first time home buyers.
Yeah, I've closed almost 400 loans with, I would say 60% being first time home buyers. So more than half of my closings have been first time home buyers.
Did you take
Several
that
different loan
refi boom out
products.
too? Like the refi boom that was happening? I mean,
Yeah.
you're probably more 70 to 80% then.
Yeah, true.
Because I mean, a lot of it, when that refi boom happened, probably a lot of them were your first time home buyers too.
Yeah, but I still focused on a lot of purchases then.
Did you? Okay.
I didn't get sucked into the whole refi craze. Don't get me wrong, like I took care of past customers, helped a lot of people with their refis, but I was still focused on a lot of purchase business.
That's what you have
Just
to
because
be.
I was worried that refis would dry up eventually,
And they did.
because interest rates couldn't stay so low for so long, and then or if they did, eventually everyone's gonna have a 2 or 3% rate, so then you're not gonna refinance again type of thing. So
Well, I'll
uh
say this, any loan officer that's listening to this, you need to focus on purchase business. I mean, you kind of
100%.
you have to right
Yeah,
now,
take
but
advantage of refis when they come your way. You can advertise it. Don't get me wrong, but yeah, I'm so happy and thankful that I focused on purchase business, my relationships with referral partners and realtors and stuff like that, because it's what helped me, after rates went, from twos to threes to fours to fives to six to sevens.
the
So
eight and back down to six, sevens right now. So not too bad.
yeah,
All right, so let's get into it. First time home buyers, I think is our bread and butter in the mortgage world. I think it's really, really good topic to have with it. Um, they are probably my most favorite clients because you're taking somebody that has never bought a home, no clue what they're doing on it, and you're able to take them where they don't think they could buy a home to you're handing them the keys basically
right.
to their new home.
Yeah, definitely one of the most rewarding aspects of our job. I'm a big believer in, obviously we're mortgage loan officers. So we believe in buying houses, but
Yeah.
just like that, like buying your first home and having that build equity and then that equity being used to purchase your next home that's, maybe a little bit nicer and bigger, and you start growing into it with a family and stuff like that, but then eventually leading to generational wealth, stuff like that. Like I'm just a big fan of home ownership being a part of, your financial success. So it's buying your first house is a huge step because when it's your first house, you haven't done it before. So there's usually a lot of questions, a lot of concerns. Is this a smart move? How do I know what I can afford or what I can't? So there's just a lot of questions. And being that loan officer that gets to guide first-time home buyers and help them understand, what to look out for, different loan programs. There's a ton of, whether it be down payment assistance, just simple first-time home buyer programs, stuff like that. There's just a lot of information out there, and there's some misinformation too. Where
Yeah. Like, I mean, or what, last episode or 2 episodes ago, we went over home buying myths kind of thing. So just so
right,
much that people think one way and it's just not true. Now, some of those are true on a part of it, but not complete. So,
yeah.
you know, let's start with the kind of the
The
basics.
first step, no matter what, get pre-approved.
Get pre-approved and don't mess it up. Can't say it
Yeah,
the other way.
yeah,
I say don't mess it up in the sense of who you get pre-approved through matters. Who you work
100%.
with matters. There are, sad to say it, but in any industry, there are bad apples out there that will give you a pre-approval letter and it's not worth the paper it's, printed out on.
Yeah, getting pre-approved, and there's a difference between. We should probably say this too. There is a huge difference between getting pre-approved and pre-qualified.
Exactly.
So if you were to look at a pre-qualification letter, it basically says that the home buyer has had a very good conversation with a loan officer. That's it. That's it. That's basically what that letter will state. Getting pre-approved means that credit has been reviewed, income has been reviewed and documented, assets have been reviewed and documented. So, and in our situation, like we're doing TBD loans, we're getting things, approved up front.
So what's
It
before we go, a TBD loan?
to be determined, but that's referring to the property itself. TBD loans are getting fully underwritten by our underwriters so that then once we do find a home, we simply input the address. We've got to worry about title work, appraisal, stuff like that.
Yeah,
But it allows us to close much quicker because we've already underwritten the buyers.
correct. The buyer's
Um,
income and all that has already been taken care of. That there's
correct.
no changes on that part of it.
So, but that the whole pre-approval just means that you are 100% ready to submit an offer on a house and you have a good understanding of what your payment's going to be, your cash to close is going to be, what type of loan you might be working with. And then working with a good real estate agent, they're going to know what kind of house to look for and stuff like that. So it's just, that's the first step, is getting pre-approved.
Yes, exactly. Getting pre-approved. And what I want to kind of talk about on it is some people get scared to even take that first step of it. They don't, they're scared about their credit, they're scared about their assets, whatever, they don't have enough money. And so many times I've had buyers come to me that didn't think they could be pre-approved, they could buy a home. But they
Right.
finally had that talk, and I'm like, you're ready to go right now. Like, there's nothing you need to do. Some of them, they do have credit issues or they don't have enough assets. So they have credit issues, and we're working with them on that. Like, what can they do to improve it to be qualified? And then, of course, if they don't have enough money for closing costs or down payment, like you said before, there's so many programs out there for down payment assistance. I mean, I know for Florida, the big one is the Hometown Heroes that just got approved by the state to come back this
We
summer.
all thought it was coming back, but it's like now in writing, officially coming back.
Yep.
First week
Putting
of
another 100
July,
million into it.
$100 million is being allocated to that fund, which will likely be gone in 3 months. I think it lasted like 2 months last year.
Yeah, it was not.
It was quick. But
Very,
it's
it was
been one
very
of the
quick.
most beneficial down payment assistance loans
Yeah.
that you can do. You get 5% of the total loan amount towards down payment and closing costs. I mean, at a lower than market interest rate, there's less fees. I mean, it's just a great program. It's been a game changer for a lot of first time home buyers.
And when that program retired, I don't want to say it, but runs out of funds, there are other programs out there. So I've had people who are like, oh, I can't do anything. It's gone.
Right.
I'm like, we're still closing first time home buyers or anybody with down payment assistance out there. So there is still an option with that.
Right.
But the biggest thing, as you were saying, is your budget. Figuring out what you're comfortable paying a month, what you qualify paying a month, which could be two different things. You could qualify for a lot more, but you don't necessarily have to spend all that. You don't have to spend what you're pre-approved at.
Right.
Maybe you're pre-approved for 3 grand a month, 4 grand a month, but you want to spend 2,500. You can do
Right.
that. But knowing that
You've
budget,
got to either bring down your purchase price or increase your down payment. Or, I mean, there's certain ways to get there, but dude, there's nothing worse than getting a call from a potential buyer who's already found the home that they love. And then we go through the application process to get pre-approved. And that home is either out of their budget or like way out of their comfort zone. And yet they've already fallen in love with it, but they didn't take the time ahead of time to get pre-approved. And now I have to deliver the bad news that you either can't afford this or you're not going to want to. So that's why I think it's important to get pre-approved up front as well, just because I don't want to have that conversation. Like, I
yeah,
just, it sucks. We found the house that you love. The neighborhood's great. Our kids already saw it and they love it. Like, well, it's a little outside your price range for what you want.
yeah,
That sucks.
it's horrible to go through that part. So that's
And they could have
most,
avoided it if we had had a pre-approved amount. We agree on the purchase price, what the payment's going to be estimated, and then what their total cash to close is going to look like. If they're shopping within that budget, they'll be fine.
exactly. So talking about it, like down payments, most people think we went over this with the buying business that you need 20% down. And though
You don't
20%
need it.
down avoids, mortgage insurance, your PMI on there, but many first time home buyers don't have that money with it. So there are programs out there designed to help them where the down payment can be as low as 3%, FHA 3.5%. I mean, if they're a veteran, they're at zero. If it's a USDA loan, it's at zero. So there are other programs out there to be able to help the first time home buyer not have to have that huge chunk of money right up front.
Right. No, and I mean, there's been times where like I've been working with buyers and they need to save a certain amount of money. So, and I try to give them goals and a specific goal to reach. If you can save $1,000 a month over the next 6 months, you should have 6 grand. And that'll get us to where we need to be because you've already got however much money saved. So then that 6 grand bridges that gap to where you've got the down payment, a portion of closing costs or whatever. And then there's times, like you said, where we might be able to get that 6 grand from a grant or a down payment assistance program. So we may not have to wait. But one of the biggest things when it comes to like a larger down payment is obviously it's going to lower your payment. It makes your payment more comfortable. So are we saying like don't ever put 20% down? No. But if you have the ability to save and you're just starting that savings process, but you've got 3.5%, 5%, maybe 10% down, yeah, let's look at numbers. Let's get pre-approved. Let's see what that payment looks like. And if buying a house and you making that mortgage payment doesn't hurt your budget, you're still able to save, I would buy now. And if it's going to take you a little bit longer to buy because you want to save up 20% down, I just think that you might be missing out, with appreciation and stuff like that. I don't know. And like, so, but there's also down payment and then there's closing costs.
Yeah.
So closing costs are going to vary depending on the type of loan you do and what your loan amount might be, how much you're putting down. So we say it ranges from 2% to 5%. On a higher purchase price, that percentage number is going to be a little bit lower. Every lender has fixed costs for certain items. So on a lower loan amount, that fixed cost is a higher percentage. Like if you have a $1,000 origination fee and you're buying a $100,000 house, that origination fee already accounts for 1% of the purchase price or the loan amount. But if it's $1,000 origination fee on a $500,000 loan amount, it's much lower.
Yeah.
So that percentage can really range
And
from 2% to about 5%.
this is where you have to be careful as a home buyer is who you're working with is because I've seen people get pre-approved and then they bring me the loan estimate, the numbers that the other person pre-approved them at. And usually it's an online lender, has no clue about the area. And I'm like, they put your insurance at $100 a month. your taxes at $100 a month, and you're buying a $400,000 house. Like that's not going to happen here. Like
Yeah.
that's
So
they're
for
just
anybody
plugging in
listening,
numbers and they're not giving you realistic numbers. So now they're not giving you realistic numbers. You have an unrealistic point of view on it. And it's sad to say is that you'll go under contract with that, think you're good, and then the real numbers come out and they're like, oh, well, hey, you actually don't
yeah,
qualify for it. Or hey, it's going to be, you were thinking you're going to pay 2,500 a month and now you're paying 3,500 a month. Like, yeah, you might still be approved, but that's a that's a big swing.
so and for anybody listening, Florida is going through some changes and some issues when it comes to homeowners insurance. There are still some good companies that are writing us good policies, but that expense has just gotten a little bit more expensive. Homeowners insurance just simply costs more than it did a couple of years ago.
Yeah.
Not a whole lot we can do about it. Also, property taxes are going up, which is like annoying, but also a good thing because they're based on the cost of the home. So with property taxes increasing, that means that the values of our homes are increasing. Appreciation is
Exactly.
a good thing,
Yeah.
so, but yeah, I've gone up and I've even like had home buyers reach out to the other loan officer and ask like, why are you using this amount when they have a specific property in mind, like pull the property tax bill. And
Yeah.
I've had online lenders say like, oh no, we just do like this percentage of the purchase price. What? That makes no sense. No sense. And underwriting guidelines require you to go by the most recent tax bill anyways. So
Yeah.
you're wrong twice.
It's sad to see. And I mean, almost anybody that gets it, they're not always wrong. Don't give me that. I mean, some of these online lenders could be right with their stuff that they're doing, but the majority of the ones that I see, you well, here, I'll say how I do. I rather show you slightly higher numbers at the beginning, and then you go to the closing table with lower numbers
Right.
and have to have come with less money to the closing table. Then the other way around, where I tell you lower numbers and suddenly you have to come up with more money out of pocket or have a bigger payment monthly, like nobody's going to be happy with that.
Right.
So you've been pre-approved. We've gone through the credit, the income, the assets, everything's been verified with all of it. You kind of know what your range of what your payment's going to be estimated and the closing costs. So now let's go find the house.
The hunt is on.
It is on. So it what most people don't realize is your first home doesn't have to be your forever home. And that's usually the biggest thing, like, oh, it's got to have all these. Now, there are things that you must have. So write a list of your must haves and the things that you want to have in it. But you also have to realize what you can afford, what you're comfortable with. And the perfect home does not exist out there. But you have to find the perfect home, the home that fits you perfectly and
Right.
what you're okay with on there. And also think about, hey, you might only be there 2 3 years and then you're going to sell it, take that equity and purchase something else or rent it out and have a rental property and then buy something else. So
That's
that
that I think has changed over like generations. When you think about like my mom bought a house and never moved out. Like 20 something years later, like she was still in the house. Whereas our generations now are buying houses and within 4 to 7 years, they've sold and bought a new house.
I think it's yeah, I think it's 3 to 5 or I think Florida's more 3 to 5, but like nationwide, it's like yeah, 5 to 7 years, 4 to 7 years that people move.
Right. So I don't know. There's also, I mean, when we are in a little bit higher interest rate market right now than we were, home values have gone up. So the cost of a home is just simply more expensive than it was, when interest rates were, 2.5%.
Yeah,
So I think that there's some buyers that look at, friends or family that maybe bought a home during that time frame when interest rates were low, home values were a little bit lower, and they might have bought that step up house as their first house. They skipped the starter home because interest rates were so low they could afford more. And so now we've got home buyers that are looking around and thinking like, well, I don't want to buy a starter house. I want what like somebody else bought, but you can't go back in time. And I think it is better for you to buy the starter house, start building equity at an affordable payment, And then later on, within that, 3 to 5 years, you can sell, take that equity, put it down on a new house, or maybe by that time you've worked your way up at your job, you're making more money. You might want to keep that home as a rental property, and you've saved up 5%, down to put on the next house, and maybe you keep that as a rental. And then you're, renting that, you now have passive income. That might be beneficial for some people. Some people like the idea of creating a real estate portfolio. So that could be an option. But I think that, there's a little bit of a mindset shift that's happened, in the last few years where we need to get back to buying a starter home and having that be okay. You know what I mean?
Yeah. I mean, with home values that increase so much, starter homes are higher in price now than most people were expecting it to be.
Right.
But you still definitely have to pick that starter home, build that equity, and keep moving it up with it. So,
But regardless of like starter home or perfect home or whatever, let's say you go under contract, like you submit an offer and it gets accepted by the seller. What next?
you close, right?
No. I wish it was that easy. I wish it was that easy. You've got
I will say our
inspections
company,
and
our so on the lending side of it, once you go under contract, the lending side of our company has made it very seamless and very easy on the buyer for their stuff.
simple process.
Yeah,
Yeah.
it's very very simple. I mean, most people are, I still have clients that are like, oh my gosh, this like you made it so easy. Like it was still stressful because it's buying a home, but it was you like walked us all the way through it. And they're like, I can't believe like if I went to somebody else, like this would have been a complete disaster. Like even if it
Right.
was an easy loan, like they feel like just what we do as a company with it and keep it in there. So, but yeah,
Yep.
so you go under contract, you get the offer in, it gets accepted. You now have to, depending on how the contract was written, that you have your escrow deposit
Yep.
to put in with, or your good faith deposit, depending on where you're at. Some people call
Earnest
it different
money
things.
deposit, escrow deposit, good faith. There's a bunch of different names, but basically it means that you're putting a certain amount of money, and it's typically around like 1 or 2% of the purchase price, into an escrow account, basically stating like I'm putting this on the line because I'm like interested in buying the house.
Yeah.
And then putting a dollar amount to the contract and putting money down makes it a legally binding contract. So now if you were to back out for no reason, you just simply got cold feet, the seller could potentially keep that money.
Yeah. If you backed out of the contract, basically illegally, you didn't, there's certain things written in the contract as you were talking, like you have your inspection with it.
Inspection period is typically 7 to 10 days from your effective date. Effective date meaning the date everybody signed and agreed to the contract. So if you've got an inspection period lasting 7 days, then you've got 7 days to get an inspector out there, review the inspection, and decide whether or not you want to move forward. Or
Exactly.
you might need to renegotiate something. Hey, we found active leaks in the roof. And the roof is 20 years old. It needs to be replaced. And sometimes that's just not because the buyer wants it replaced. It might need to get replaced in order to bind insurance.
Exactly.
You know,
So yeah, when you go during that, that's when, yeah. So today is March 25th when we're recording this of 2024, and the whole buyer's commission settlement came out from the National Association of Realtors with it all. This is where I'm really big on it is if you got to start negotiating back and forth and you don't know how or don't know what to do, like having that realtor on your side to help you do all this is huge.
yeah, 100%.
Because it's something you might think is major might be just something minor, something that's minor actually might be a major issue with it. So there are things that you need that professional opinion to come in and then basically go to bat for you,
Right.
with against the, I wouldn't say against, but with the seller's agent on negotiating and finding that middle ground of what could be done. So
Right. No, I think the NAR settlement, okay, little side note here. The NAR settlement is, there's a lot of misinformation out there. If you've seen a news article stating that sellers are no longer allowed to pay a buyer's agent's commission, that's entirely inaccurate. They still can. They just can't advertise through the MLS. So if you have questions about that, please reach out to your realtor. Most realtors are getting ahead of this. They're figuring out like what changes are coming. Nothing is set in stone yet. It hasn't been signed off yet. And if changes are going to happen, it'll be in July that we know exactly how we're moving forward in certain things. But for now, a seller can simply still pay for a buyer's agent. That has been commonplace in this industry for years. The commission structure has always been negotiable. A lot of consumers just did not know that they could negotiate the commission. So it was
they're just bringing more transparency to that.
correct.
Consumers said they weren't. I mean, at least from the Florida contract, I'm like, you can see exactly what's happening. What percentage is going to who, how it's all written in there. I guess most people just didn't realize they could say, you know what, I wanted it to be a different percent. But it is what it is now. If this new change comes into effect, it will change things. But to
Right.
me, the bottom line is a realtor
Buyers
still,
need buyers agents.
they need representation.
Buyers need
They're still going to need
representation.
it.
And they need it just so that there's somebody else working with us, so that the stuff that Derick or Stephen says gets backed by the realtor. Like, yeah, nobody's taking advantage of you. This makes sense. Keep us in check. That's fine. I have nothing to hide. And it's just, but especially first-time home buyers, they need help understanding things. They've never bought a house before. I don't blame them for not knowing every little detail, every little step of the way. But having somebody helping me hold their hand is beneficial. So, and especially during like inspection period. Just writing the contract and allowing an inspection period.
Yeah.
And I've seen deals where there's no inspection period or whatever. Okay. If that's how you want to move forward, great. There's just so much risk involved in that. You're making one of the biggest financial commitments of your life, and you're not going to have the home inspected. So also please understand that an appraisal is not a home inspection.
That's a good topic you just brought up. Okay, so inspection and appraisal, two different things. Inspectors looking at
different things,
all the details of the house, how it works, how it was built, yada yada yada, going through all the details of it. An appraiser comes out there and looks kind of like the square footage, the upgrades to it, and says, hey, with all these things in this house, this is how much it's worth.
Well, and think of so an appraiser will walk into a bathroom, turn the light on, turn the sink on, turn the tub on, water works, lights work, he walks out. Yeah. And an inspector goes in,
he turns
and
the water
he
off.
or she sees the wallpaper turning up a little bit. They might peel the wallpaper back a little bit, or take their little and I don't know what it's called, but
the doohickey.
The little doohickey tells you if there's moisture in the wall. But they'll look to see, is there moisture behind this? Is that why the wallpaper's peeling or bubbling or something like that? And so it's just way more in depth to try and find if there are any issues with the house you're purchasing. And hey, shout out to sellers. You can do a pre-listing inspection. You can get ahead of it. Inspectors and real estate agents love when you do a pre-listing inspection. I've done it on the houses that I sold, just so I know, hey, what is something that an inspector might find that I am unaware of? And houses that I've owned, there were issues that I was unaware of, but I was able to get things fixed or choose not to. I'll let the buyer deal with that.
You're exactly right. I mean, there are things on that inspection list that we always call them honey-do lists, the stuff that you just being a home owner, things you have to fix and take care of. But there are things that could be major that when you sell your house that you might not even see. And so then you go, okay, yeah, I'm going to have to fix this if I want to sell this place. I'm going to go have it fixed and taken care of, so it doesn't cause any more damage. But there could be little things that, that the next buyer will take care of if they decide to or not, anything. So we got through inspection period. That's been completed. Good or bad, you went through it all. You decided you wanted to move on with this house, and all this negotiation for that is done. Now comes the appraisal
Yep.
with it. So the appraiser is going out there, like you said, and checking to make sure things work to make sure the value is there. A house that has water that works or an AC that works to that doesn't,
Right.
can make or break it.
They look for issues with like health and safety. There's certain things that they have to look out for.
Yeah.
But I mean, one of the biggest components is they're trying to tell us what the home is worth. So based on similar homes being sold nearby, what are other people willing to pay for this house? And an appraisal is simply that appraiser's opinion of value. So if we had a home appraised by 3 different appraisers, we may not get the same exact dollar amount. Let's just say contract price is 350. You might get 345, 350, and 356. And I've had it come in like 351. $1,000 higher. Like, okay, like, hey, you got $1,000 worth of equity.
Yeah.
Congratulations. But it could be 3 different prices. But that's the appraiser's job, is to, not lean in any direction, but to just give us a completely unbiased opinion of value. And that's what we lean on, in order to lend money. I don't want to let you borrow $300,000 for a $250,000 house.
Yeah.
That's You don't want that. That's 08 and 09 all over again.
Yeah. Doesn't make sense. So that's why, yeah, they come out there to do the appraisal, and they're third party people that come out. Like they're not with our company. They come out there, they get paid to give us the appraisal of what they think it's worth. Now,
Right.
we have seen them where they have come in super low, and I don't want to say super low, but lower than expected. And then when we look at the comps they put out there, there could be something that's a little bit off on those comps. They could be exactly right, but there could be something off. But then you can also, if the appraisal does come in low, you can, what's the word I'm looking
Renegotiate.
for? Renegotiate it, where you either the seller and the buyer and all them get together and say, hey, here's other comps that we don't think the appraiser used and should have used, and we can push that up to the appraiser. They can say, yep, okay, I was wrong, I can use it. The property desk can look at it and say, hey, we push it to the appraiser. They said no, but we think they're wrong, and we can do a new appraisal completely. So people
Right.
always think like, oh, if it's going to come in low, like that's the end of it. Like, no, there are steps. Now, if the appraiser completely right, and they go out there and the comps they used were correct, everything they did was correct, and by the book, you can't argue it.
Right.
But you do have a foot to stand on if you see that they made a mistake and you're trying to get it corrected.
Right.
So appraisal's done, inspection's done, but during this process, what should you be having quoted and finding out?
Homeowners insurance.
Biggest thing in Florida that I feel makes or breaks
Homeowners
deals.
insurance now. And why did we get a home inspection? Part of your home inspection, like when you're buying the home inspection in Florida, keep in mind, we're in Florida. You are most likely going to be getting a 4-point and wind mitigation report from the inspector. And that's not because we require it. Most insurance companies are asking for that in order to provide an accurate quote, or in order to bind the quote.
Yeah.
So if your home, if the home you're purchasing is 5 years older or less, like so somewhat of a newer home, you might be able to get by without having a 4-point wind mitt done. But anything older than that, you will likely be required to provide a 4-point wind mitt for accurate homeowners insurance policies. So during this inspection period, I really like to try and get those inspections sent to our insurance agent so we can get an accurate quote. There have been several times where we're estimating what we think is high, and then insurance comes in even higher because of issues that the house has going on. So sometimes that leads to us renegotiating something. Sometimes that leads to, the AC unit has less than a year life expectancy. We need to get it replaced. Or the roof, has significant granular loss and has less than 3 years remaining. We might need to get it replaced. Otherwise, your insurance is going to be pretty expensive.
Yeah.
Because that insurance company is looking at the fact that you are probably going to replace this roof in the next 3 years.
By not just replace it, they feel like it's going to give out.
Right.
And then the insurance company is going to have to pay to have it replaced.
Right.
So to counterbalance that, they have to give you a higher insurance policy to because they feel like it's going to happen anytime. So
Right.
that's how they counterbalance that with it. So you have to get to your insurance. So yeah, when you get that win at 4 point, I feel like that's what takes people forever to do. Usually when we go under contract, I send it to a couple of insurance agents and I say, this is the house. Give me the worst case insurance
Right.
policy on it. So we kind of have a worst case number already in mind and making sure that still works. And then we can kind of work down from there. But like you said, there could be, grain you're lost on a roof is a huge one in this area that people think like, oh, the roof looks good. But then you really get up there and you realize like it's just a couple sheets of tar paper. It's all that's
Yeah.
up there.
Yeah.
So
Okay. So we've gotten insurance locked in. We're good there. We've gone through underwriting. Interest rate is locked. All the things are good to go.
well, I don't want to skip over that interest rate lock because
Don't skip over it then. What do you want to
that's
talk about?
that is
If you like it, lock it.
eh,
That's my
I mean,
quote.
and that's where a lot of lenders I see out there that they don't lock it right away, and then rates kind of tick up, and then they suddenly lock it, and there's points or fees or whatever the case is. What people don't realize is like you go under contract, you should be locking your rate, unless there's a trend that it should be coming down in between. But even then, with us, is if you lock it and it goes from the day we lock it to the day of closing, and it goes down in the market,
Eh,
then we can drop it down to it. But if it goes up, guess what? You're still locked at that lower rate that you have.
correct.
So
So I do the same thing. Once we go under contract, we know the house, we've like pulled the property tax bill. The only thing that might fluctuate a little bit, but hopefully just goes down is that insurance. And then when we're looking at rates, I explained that if we lock today, we are locking in worst case.
yeah,
Worst case. And if we don't lock and we go a couple days, interest rates could spike up and there's nothing we can do. Nothing we can do. And there's so many different factors that go into the market that play with interest rates. The Bank of Japan, has made our market adjust in a weird ways, both up and down. So there's a lot of things that we can plan for, but in our current market, our current environment, there's a lot of volatility. So the most recent Fed meeting did give us some hope. It did shine a light towards future rate cuts, which is good. But still, if you are going under contract, I recommend locking, just so you know that that's your worst case scenario. And then hopefully you're working with a lender that has a rate renegotiation or a rate float down policy. That way, when you're within a certain amount of time of closing, you might be able to drop that rate if the market has come down a little bit.
yeah.
So yeah, and that's my advice when it comes to locking an interest rate. I don't like the stress, because if it goes up and you haven't locked, there's nothing you can do. You've got to then say a prayer that it comes back down.
Yeah. Yeah, there's these people that want to what we call float it, which is don't lock it, just let it float out there and hope it comes down. It's like, so why don't we just lock it now? And you're still floating.
Right.
If it comes down, then great. Then we lower it. If it doesn't, then hey, you were still locked in. But if it goes up, you would have wished you locked. That's
Dude,
usually
there is a loan officer that I respect. I think he's great, local near my area. And he had done a Facebook post. This is like in November or December a year ago. So not 2023, it was like 2022, talking about like, I think we're going to see 5% rates, next year. When do you guys think it'll be? And people were saying different dates and stuff like that. And then he's like, I think it'll be March. And I'm telling you, this guy is very smart, well respected. He's a great loan officer. I've like had lunch with him, and he works for a different company. But he couldn't have been more wrong. And there are a lot of us that were thinking like we're gonna see rates, come down a little bit, sooner, and just the market had, a different plan. And it didn't happen. So even though like some of us might be considered really smart, we think that this might happen in the market and stuff like that, there is no perfect crystal ball, that says what could happen. So if one of the best pieces of advice I can give is if you like it, lock it. And then you're locked in your worst case scenario, and hopefully by the time you get to closing, you might be able to do a float down, or you're just super happy with the rate and the payment and you're good to go.
Yeah.
Always remember that, you know,
If you do a float down, that's the cherry on top.
yeah, cherry on top, but also like I don't want anybody to buy a house praying for the ability to refinance as soon as possible.
Yeah.
If that's what you're praying for, you might be
You're not
making a
ready to buy it.
mistake.
Yeah.
Yeah.
You're not ready to buy it.
So and rates are higher. Like our rate is higher than our last house. We didn't like it. However, it's a payment that we can afford, but I can tell you right now, the first opportunity to refinance, I'm jumping on it. Absolutely. Why would I not?
I'll do it for you.
Oh, okay.
All right. So
That's fine. I'll do your VA Earl.
there you go. Yeah, that's an easy one. The joke is on you because I probably won't ever do that. I don't think rates will ever drop that low. But so everything has been locked, completed, inspected, insured. Everything gets pushed back up to underwriting to approve it all, to give you the clear to close with it.
Good to go. Clear to close. Closing day has arrived.
So what is happening?
You're just gonna get hand cramps from signing. And
not necessarily. I will say the first mortgage I ever did, like for me, I had to sign every single document by hand.
Yep, same here.
And I feel bad for those people that do power of attorney for somebody else, because people don't realize you have to sign that like that name, power of attorney for this person. Like it's like a freaking book per signature. But we, as in our company, there is a lot of documents that are electronic that you can sign. So it does make closing day better and signing.
It's so much easier now. So majority of our loans, we're able to e-sign half the package. So if you've ever bought a house before, there's probably 100 pieces of paper that need a signature. Now we're down to 50. So you're able to review everything ahead of time. I like that too. And I'll review it with my buyers, make sure that if they have any questions, a lot of times they just simply don't. We're good to go. We e-signed the first half of our package. They'll show up to closing, wet sign the other documents that need a wet signature. And then
you said what's great is they already have reviewed it. So when the documents come in front of them, they just kind of double check and be like, yep, okay, yep. It's the same.
Good to go.
Yeah.
I think the e-sign now is, and dude, I've been to so many closings where the title agent, like the title closer that's there, is like, oh, I love these mortgage front packages. And I'm like, you're telling me that other lenders aren't e-signing half the package? And they're like, no.
Yeah.
Lenders, come on.
I thought it was an industry standard until the same thing. When other people are like, oh, I love when you guys come here.
Yeah. So, but even if you're not e-signing half the package, you got to wet sign everything. Just be ready for, little hand cramps. You might have to, stretch out the fingers halfway through. But you've signed everything and you get some keys.
Congratulations, you're a homeowner.
Yeah, you made it. The journey was not a sprint. It is a marathon. There is a lot to it. Sometimes you got to take a deep breath, slow down, but it's ultimately not that difficult.
It really isn't. I mean, we do it every day, but working with somebody that actually helps you through it, where, we can hold your hand all the way through, or we can give you as much space as you need all the way through. Right. Some people, even if there's their first home, they're like, Stephen, whatever you say is what I'm doing. That's all I need to know. I'm like, all right. I mean, I'm not hiding anything. But it's like, some people are like that. Some people are like, I want you to explain every detail, and I will explain every detail to them multiple times at times. Okay. That's part of our job, is to make sure that everybody is happy with the service that they're getting with it, that they're able to get the home. They shouldn't worry about the mortgage side of things on it. They should be worrying about, what am I going to do once I move in, kind of thing.
Right.
Where's this couch going that I'm moving in the living room, kind of thing.
Yeah. No, a good loan officer is open to all the questions from any type of buyer.
Yeah.
So it's something that we might do on a regular basis. We know a lot of the answers. Some of it seems like commonplace to us. But for so many people, it's not common, you know. But that's also like, I don't know. I don't, to an engineer that builds bridges. They might think that that's easy. They know how to build a bridge. Guess what? I don't. I'd ask
Yeah.
a lot of questions if I started getting involved in bridge building. I don't know.
And
So
I probably asked the same question 100 times just to make
yeah,
sure I understood it.
yeah.
Like, well, what about this? Oh, you already asked that. Well, I need to know again.
So to any potential home buyers, the response from your loan officer can be a great hint towards whether or not they are a good fit for you or not. Look for somebody that's willing to explain everything that you want explained. You know, that's one of the best pieces of advice I can give.
Yeah, I think that hits a nail on the head right there. Working with somebody that basically gets you.
Yeah. And that cares, you know, and can get, and I'll tell you right now, there have been times where I've been asked questions that I didn't know the answer to, but I'll get them. And I won't lie. I'll say, that's a great question. Let me find out for you. You know, so it just depends. But yeah, so I don't know.
That's
That's
it.
all I got.
It's so simple. So, well, thanks everybody for tuning into the Brutally Honest Loan Officer podcast. So, whether you're just thinking about buying a home now or if you're already deep in the process, we're here to provide you advice, a little bit unfiltered, but just to help you navigate the mortgage world in the home buying process. See you
That's
guys next
it.
time.
See you guys.